Healthcare stocks still had a strong day, but the big talk on Wall Street was all about Cisco and Walmart. Investors dumped Cisco shares, reacting to that bad earnings report we told you about last night, and that shaved 15 points off the Dow. And Walmart's earnings today did little to inspire investors, and that Dow stock rose just a bit. And we're going to have more analysis on both Walmart and Cisco in just a moment. Still, those disappointments did not stop the market rally, and new highs for the record books. The Dow added 54 points to a fresh record. The Nasdaq gained 7, and the S&P up 8.5 points. It also moved to a new high.
All right, let's talk about shares of Cisco Systems. They were the biggest drag for the Dow today, also for the S&P and for the Nasdaq Composite, with the stock tumbling 11% after forecasting that continued decline in sales for the rest of the year. John Fort has more on what's driving Cisco shares lower.
After Cisco reported a bad quarter last night and a dismal outlook, the stock had its worst day in almost 3 years. The culprit? Emerging markets. Countries like India, Brazil, and Malaysia that just a few months ago were bastions of growth are turning into a nightmare for big tech companies.
It isn't just high tech, it's the consumer companies of our customers, the people who sell in Brazil or sell in India, or manufacturing who sells in those areas. What you're seeing is the GDP slowed. And as they slowed, and you and others have talked about it for almost 6 months, then confidence began to drop. And if they're looking for the U.S. to lead them out of this scenario, clearly the last month or two has not instilled a lot of confidence.
At Cisco, sales from the top 5 emerging market countries fell 21%. And that's on top of a rough sales environment in China that got worse because the NSA spying scandal has buyers favoring local Chinese suppliers. All of that led Cisco to forecast sales this quarter will be far lower than a year ago. Analysts had been hoping they'd be up. And it's not just Cisco. IBM cited major trouble in emerging markets during its quarterly report last month. And Oracle has struggled in Asia, too. A smaller networking player, fast-growing F5, says it's a regional issue.
Asia's been reasonably tough for us. It's been good in South Asia, Vietnam, Australia. China was particularly tough last quarter, and we called that out in our conference call.
Things aren't likely to get better soon, analysts fear. What Wall Street would like is a roadmap for how Cisco will steer through this.
We do think it's a several-quarter issue. We think China, I think, can be even longer than that. The next thing to look for is Cisco's Analyst Day, which comes up in about 3 weeks, and they really have to have some crisp responses on what they're going to do.
One thing they're probably going to do is keep CEO John Chambers around a little bit longer than some expected. Chambers tells me he plans to retire sometime in 2016. The board has asked him to stick around and guide the company through this very rough patch. For Nightly Business Report, I'm John Fort.